Now let's have a look and see if we can find a Gartley pattern. Here's an example of a stock that's been increasing in price over several months. It's a daily chart of McCormick, and it looks like there's some sort of correction going on over here. Just to identify the swings that are on this chart, let's go ahead and apply a percent swing overlay. And this is a 3% swing overlay that's identifying the significant swings in this strong bullish move in McCormick. Like I mentioned, this most recent price action looks corrective in nature against the trend, and the assumption is that at some point there may be some sort of support here before McCormick goes and makes a new high. What we want to do is find out if there's a potential Gartley pattern here. So let me zoom in on this most recent price action here. So we see a little bit of a decline, a little bit of a correction against the trend, and then the trend resumes and makes a new high. So this would be the first XA move of the Gartley pattern, of a potential Gartley pattern. So let's zoom in here a little bit more. And the first thing that we need to do is we're going to project a price extension of this leg here. And to do that, we'll go to Tools, Levels, Price Extension. Okay, and what we're going to do is we're going to measure this leg here from this high to this low. So we click the high, we click the low. And now we project that range from this high here. That would be the C point of the Gartley pattern, where it's projecting from. So my fourth click drops this, this line here. So if the market comes down and touches this line, that means that this leg here is equal in price to this leg here. Okay, now that we've applied the price extension tool, we need to apply the price retracement tool, and we would apply that from this low here to this high. So we're going to measure the trend, and we expect there to be some sort of retracement and some sort of support here based on a Fibonacci ratio. So let's go to Tools, we choose Levels, and go to Price Retracements. We click the X point from the low up to the high here. There's my second click, so I'm measuring that trend move, and now I drag these Fibonacci ratios across the screen, and I click one more time to leave them there. Now, as you can see, my price extension target here at 44.05, it lands beside my 78.6% Fibonacci retracement at 44.20. If this red line landed closer to the 61.8% retracement, I would call this a 61.8 trend continuation Gartley. However, that's not what we have here. We have the price extension projection landing right beside the 78.6% retracement. So this is what we call a trend continuation Gartley at 786. So with that being the case, we don't need this Fibonacci retracement level here. So we'll delete that. And you can see it's clear that this is the zone now where we expect a reversal. If the market comes down and touches 44.20, we will have a valid bullish trend continuation Gartley pattern. Now, between these two lines here, the emphasis is going to be on the 78.6% retracement. This red line is just simply confirming that that is indeed the Fibonacci number where the market's going to reverse. So now let's add some bars here and see what happens. We have this in training mode, so we'll just add some bars. We've added some bars, and we would have put a buy limit in on this blue line here, which is 44.20. So as we add a day worth of data, we'll do that here. It comes down, you would have filled here at 44.20. Now that we're filled at 44.20, we keep our stop here. We add some more bars. And we'll see what happens. Okay, so that's the price action as of today. So we can see that the market came down and reversed right at the expected zone for the reversal here. It never even got close to our stop, and it was pretty precise. So this is an example of a bullish trend continuation Gartley pattern on a daily chart of McCormick.